Good morning, happy weekend, and happy new month. Today, 1st of August 2026. So, we'll be sharing one of the best strategy on how to trade on a higher time frame. As a trader, one thing you should have in mind is ability to understand your structure, ability to know your time frame, and how to use it effectively. On this video, we'll be talking more about structure, time frame, and entry and exit system. So before we begin, try to click on our subscribe buttons, likes and share so that at any time we share this video, you always have to follow us and have the next current videos that we'll be posting time to time. So let's start with this. We'll be using three different indicators to work on this. One of it is stochastic oscillator, and we'll also be using um, moving average. The moving average will be 2. We'll be using 50 and 20, and we'll also be using stochastic oscillator. So let's see how it goes. So meanwhile, just give me 1 minute while we do that. Okay, shortly, let's just quickly come in here. We have we're going to be using JBP USD, and JBP USD will be on we'll be starting with monthly time frame, and possibly moving down to 4 hours for our entry level. So at that point, we'll be able to give you all the structures required to do whatever we need to do, right? So that is how we're going to start today. Now on the monthly, we're having a sell. That means an uptrend, but having a kind of a retracement for a sell. But for I think we are still more of looking up for a buy. So we'll be looking out for this trade to move to this level. So we are waiting for this market to come and retest this level at the monthly time frame. So that is one of our expectation. But at the internal zone, we have this zone that likely be retesting and may likely break it. So when it's broken, we will look at another entry. That is why you're having a retracement at that zone because of this particular level. Now we're going to mark our support at this zone. So we have our support here. So we have our support. That is for monthly. Now let's go back to weekly and see what. Remember, our monthly is just to get direction, weekly and daily is to get our structure. So overall direction is still a bullish trend. So with what we have here is bullish, right? So we'll be looking at this is pure bullish. So and we're going to move to daily to see what daily is giving us before we can bring in our stochastic oscillator and moving average, right? So now let's move to daily because we already confirmed that it's bullish. Already confirmed that it's bullish. So we adjust this again. Now we have a very strong retracement. So what do we now need to do? We're going to go to our indicators and bring in our indicators. Our indicators will look for stochastic oscillator. We look for, okay, let's use the one that has stochastic RSI. Then let's bring in moving average. We use moving average exponential. Think it's a bit too zigzag. Let's use the one that has just normal stochastic. So we have two here. Let's delete one. So we delete one from it. We're going to leave the setting the way it is. We don't need to touch the setting. So we're going to leave the setting that way and see how we're able to. So at this setting, I think it's a bit squeezed, so we'll find a way to make it more proper. Let's go to 4 hours so that we can do that better. So we can see the stochastic oscillator clearer now. Now what this is actually giving us is that if we're on the daily, let's see what daily is going to give us. So when we're on daily, it shows that this is a clear uptrend, but as this moved yesterday because of news yesterday. So let's check what news we had yesterday. Forex factory. Yesterday was last Friday. We all know every last Friday we have terrible news that always come. So all USD has CPI news, BOJ press, uh, GDP, and well, not really too volatile, but I think that move was just for the end of the month. So it's fine. Then we'll go back to our analysis. So what we need to do is that anytime you see this stochastic is oversold, which is below, it shows that you have to enter for. So we always go for oversold. When it's oversold, let's use our vertical line to mark it. This is when it's oversold. You can see that it's below. So it shows that this oversold has given us a sign for another startup for bullish. So this is what we have here. So it shows that it's going to give us a bullish. And if you check, the market was bullish until the other the stochastic got to overbought. So the overbought is above here, which is yesterday, July. Now, if you check back, let's mark that overbought here. This is the sign for the overbought. So at this level, you find out that if you use your vertical line, you will get the overbought and oversold. Let's see. You see it? Now, trace it down, you will find out that the upper zone of the stochastic oscillator is actually overbought, while the other side where market was selling, where it started reversing, market was oversold. Now, what do we need to do? At this level, we are waiting for this market to possibly drop down to this zone because the market is actually getting to oversold. Then we enter a buy at this level. So this is a possible entry for us to buy up to this zone. So that is how you trade on a higher time frame that will give you a good possible entry. Now remember, when you're on daily, you have a very large stop loss. So let's go to 4 hour so that we can get a good stop loss. Well, if we can use 100, it's not bad. So maybe we'll reduce it to like 70. Now we're going to take our stop loss, first take profit to be 142 plus. So this is how we'll be trading this trade in the next few hours to come. So at that level of on the next day on Monday when the market starts. So for now, it's actually not going to have any effect because what we are doing is analysis for the week against next week. So that is how we use stochastic oscillator and market structure. And overall direction is still a bullish until this move came down, and now we are now on a range. At this range, we expect this market, when market starts, possible to drop down here, then it will continue to move up again. If not, we will continue be on a sell. It all depends on what we see and the candle formation and the candlestick that we are having at this particular time. Now, if you are going to trade 1 hour, it's still very fine. It all depends on your structure, on how you're able to identify your direction of the market. So once you identify the direction of the market, you are good to go. So the same thing you can as well do on your uh, XAUUSD. Let's use XAUUSD as one of our example for this analysis. XAUUSD, which is good because many people want to trade gold. So this is how, for now, the markets, we can just erase every chart. Now we have our stochastic left. Now if you check, let's use we use this. You see that this is the market here, oversold, then it drop. Now look at this, where it's overbought again. Check this out. This is overbought at this level. So when your stochastic is overbought, that below the lower zone, which is like 70, 80 or 70, 30, sorry, 30-80, 20 or 30-70. So you are good to have a very good entry at this time. So that is how most of this market is working. So market analysis is very clear and very easy. So these are the part of the things that we put in place that gives us a very clear direction in whenever we take our trade. So meanwhile, for you to trade this, you can as well use your moving average. You can just open 50 and 20, which I have here. 50 and 20 is a good. So when you use your 20, you find out that the 20 follow the direction. So you must always trade. If your market is below, you are looking for a sell and using your stochastics to confirm. If your moving average is below, that means you are looking for a buy, sorry. And when it's above, you are looking for a sell. So you compare the both stochastic and your moving average to be sure that you are having a very good entry level. And once you're able to do this on a higher time frame, most especially on daily and 4 hours, you are sure of a very good profit at the end of the day. So these are the short ways and the best structure market we can always use higher time frame to trade. Most especially your stochastic is very very clean and very very reliable. Once you have a very good understanding on how to use your stochastic and to understand your market structures, to know that you are bullish at a particular time and you are bearish at a particular time, these are part of the ways that you always learn how to trade effectively. Now let's bring in the 70 moving average, just sorry, the 50 moving average. Okay, I think we have exhausted our two moving average, so we can't add any other one. So it's just still the same. Even if you are using 50, always make sure you can just change this 20 to 50 on your input. You change it to 50. So when you change to 50, always look at to be sure that your market is always above your entry. So for what we have here, is still on the range, is not showing bullish, is not showing bearish, right? So not showing bearish and is not showing bullish. So what we need to do is to wait for Monday when the market is, when the moving average is somewhere around here, for instance, maybe somewhere here. Yeah, somewhere here. So we can just automatically find a way to add up our moving average to confirm. And at the same time, your stochastic will be below oversold. Once it's oversold, then at this level now, you can't enter because the moving average is at the middle of the market, while the stochastic is also at the middle of the range. So you cannot enter at this place. So if you back test, check back, you will find out that both the moving average and stochastics have always been doing the same thing. Look at this place. This is oversold, this is oversold. Then the market shows below, then you can sell. But for me, what we're looking at, let this market get down to this yellow. Once it gets down to this yellow, then we can find a way to enter for a buy. See, these are possible ways you can trade in higher time frame, combining your structure, your indicators and your candlestick formation along with your bullish and bearish trend. Once that are in place and you sure that the entry levels are comparable to what you have, you can buy or you can sell. Now, you can as well apply this to every other trend. every other market such as S&P 500, US 30, your gold, your silver, your currency pairs like GBP, JPY, GBP, USD, USD CAD, USD, JPY. All these are different pairs that you can always put in place to make sure you have the best of your trade. So I want to assure that at the end of Monday, we'll all give this a trial to see how we're able to do effective time frame market structures, entry and exit. But remember, your exit level must always be when you are getting to a higher zone of your market structure. At that level, your stochastic must have been oversold or overbought, then you can exit. These are the ways you can trade effectively when you know how to run your structures in a better way. Thank you so much, and I assure that if you study this and practice it and backtest, you will have a good result. God bless you.